Let's bring on the floor show Matson Money founder and CEO Mark Matson and trader John Corpina down at the New York Stock Exchange are here for that. John, what makes these gains right now, to me, more interesting than the win streak is that they come after the weekly unemployment lines climbed to their highest since February, and then continuing claims. That's people who filed for jobless benefits but still haven't found employment. That came in at the highest since November of 2021 at 1.916 million. Where's the market resilience coming from now? What do you think? Because the market's holding up pretty decently here.
Yeah, I'm not sure if there's market resilience per se. What I do think is that our markets are very fragile, and that can go both ways, right? It can move the market up, it can move the market down. This market is just yearning for information, any little glimmer of hope that'll give us an idea on direction. So if you look at the trading activity from yesterday, we got bad economic data in the morning. As the day progressed, I think people put that behind them and they were looking forward to Meta and Microsoft earnings coming out after the bell. And that euphoria has led us into today. The numbers that we got at this morning for as far as jobs are concerned, I don't think the expectations were high. Yes, clearly it missed. But I think from that aspect, I think investors are really trying to hang on to multiple things that are here and not so much economic data. Obviously, we're waiting for more headlines coming out on tariffs, and little by little, the White House is giving us little crumbs of good hope. We've got geopolitical issues that we continue to watch and monitor. Again, we're getting little crumbs of good hope here that's moving in the right direction. And next week we have the Fed. I think we know what the Fed's going to say and how they're going to play that out. But I think overall, looking at the activity that we saw in April, down 10%, we're able to gain that back again. I think the momentum is moving to the upside, but it's still going to be choppy. We're still going to see this volatility that we've seen before in the past.
Yeah, and I'm glad you brought up Microsoft and Meta. They did not disappoint, right? I mean, if you thought that that's why maybe the markets turned around and they were hoping for good numbers, they got it. Mark Matson, let me bring you in here because through the years you have watched Meta, and I particularly bring this one up because just the other day Meta unveiled its Meta AI individual app, and it feels like and I've got in my hands these Ray-Ban Meta glasses, these AI glasses, which get rave reviews from CEOs whom I've spoken with. And you look at that, and then you look at how they have the app on the phone. They're almost in a way, this is my analysis, almost in a way kind of jumping ahead of Apple, who had such a sticky business model where you had to stick with it because of the App Store and the cloud, et cetera. They're making it a one-stop shop with AI infused into everything. So Apple reports after the bell. What do you think between these two names?
Well, first of all, I think it's extremely hard to predict the future. The reality is that all the knowable and predictable information about the future is already factored into prices today, and that's what makes things so volatile in the short run. It's fascinating to look at these companies and to look at political tariffs and recession and economic data, but the reality is nobody can tell you what the best stocks are going to be in advance, and if they could, they wouldn't tell you anyway. And secondly, nobody can tell you which way the market's going to go. Is it going to go 20% up or 20% down? But what we do know for long-term investors looking at 20 years, historically, the next 20% is always up. So the lesson for an individual investor is broadly diversify, because not even these CEOs know with anything like accuracy what their returns are going to be or their profits even for the next quarter. So if the CEO doesn't know, what the chances does an individual investor have? So it's very difficult in these very volatile times for people to sit on their hands and not panic. But they're doing both. It's like the market's schizophrenic. They're panicking in one day and the next day they're driving prices way up. Yeah. For investors, they have to really ignore the noise, tune it out, and focus long term. It's very hard to do.
Well, especially when you're getting hard data like we got yesterday, today, GDP contracting, but there are some dislocations there with that number. We'll see when we get the second and third print for first quarter GDP. But the volatility index, John Corpina, is calm, right? Matson's talking about hyper and then calm. Right now it's below 30, far below. We were at 60 in early April. There was a lot of fear that was exhibited with this, with the VIX index, and right now we're at 23. What is the message there? Because as we continue to watch data, tomorrow we are getting the big one. We get the Labor Department non-farm payroll jobs course, tomorrow, and that's for the month of April. So tell me exactly what you think. Should people be listening to these data points and trading on them?
I think the message is clear. The VIX was at 60 in August off of China bank concerns, and it traded from 60 down to 15.
Yeah.
Right. So we were at 60 earlier, a month ago, and it seems like things are calming down now. And as my co-guest here has said, the volatility is going to be here. These, in my opinion, these are opportunities when you see this volatility on a long-term basis. Look at a long-term chart of the markets and what it's done. The rebound will be there in our future. You have some of these stocks, Apple and Amazon, reporting after the bell. As you said, down 13% on the year. They've been down more than that. In the beginning of the year, if you said to someone, you can buy Apple and Amazon down 17%, you'd sign that piece of paper right now. So I think these are buying opportunities as we see this volatility. I do, again, think volatility is going to continue in our market, but the overall trend is to the upside.
And finally, Mark, as we finish up, I know that you say it's really hard to tell what exactly is going to happen when the CEOs don't know themselves, especially with this trade war, but you're pretty clear on what you say stay away from, and that's crypto and gold. You said it's a toxic investment. Gold has been an absolute winner. Why do you think gold's toxic?
Yeah, well, a toxic investment is any investment that has a massive amount of risk and a low expected return. The reality for gold is that historically it only averages 5%, but it has an 18% variance or distribution. That means that it's the same volatility as stocks. Large U.S. stocks have averaged double that, 10%, small stocks 12%, small value stocks 14% with the same volatility. So it's timing, it's picking. Gold is great for your jewelry, bad for your portfolio. And Bitcoin is useless. In a stock, I own actual piece of the company. In a bond, I have a loan against the company that has assets. In Bitcoin, there is no there. So a bigger fool theory, someone has to be willing to pay a lot of money for what you bought when there's actually no value there at all. So investors planning for their retirement, their 60s, their 70s, they're trying to fulfill their American dream. It never pays to speculate and gamble in toxic assets.
Although there's some value at the moment, at least when you look at the price here, 96,601. I can hear the Bitcoin acolytes calling and saying, Liz, what's this guy saying? But it's always great to have different perspectives. Mark, John, thank you very much.